Hello everybody, I'm going to make a short video, really. Still on holiday, obviously, so, I don't want to take up too much of your time watching these terribly produced videos, but we'll do it. Right, so let's have a look at Bitcoin. We're going to talk about this death cross, alright? So the death cross confirmed on the simple moving averages on the daily, so that counts for something, definitely. I can see a lot of people tweeting about it, and it does mean a lot, especially in traditional markets. All markets it's relevant, but I think that there's one thing worth recognizing, worth pointing out, is that actually it's less relevant on Bitcoin for simple moving averages than it is for exponentials. And exponentials are far from death crossing, but I'm going to show you two charts. And these charts aren't anything new to you. We've been talking about these on the videos, and certainly on the Patreon. There was a number of altcoins that had this setup, and we accounted for it, we expected it, and then we spoke about where it would get rejected, and then that it was a setup like this would bring you back down to where you came from after a dead cat bounce, and then maybe even break down lower than that. So this is your very skinny little purple line here, and your yellow fat line, that's your 50 simple moving averages and your 200 simple moving average, and the death cross confirmed yesterday. The exponentials down here, the 200 and the green 50 up here, not confirmed death cross. In fact, you're not going to get a death cross until you see a pullback lower than 59,500. So until you see that, that would be a much worse scenario, because the exponential moving averages are worth more to me, I believe, on crypto than anything else, because the exponentials expand with volatility. We all know that crypto is volatile, so exponential moving averages count for a lot more. So what we're seeing is simple moving averages, death crossed, exponentials not death crossed. Let's have a look at two examples of death crosses on exponentials that counted for something. And again, we were coming down on ICP. We were waiting for a dead cat bounce from the market. The market started to dead cat bounce, and I spoke twice a week on the Patreon saying if we're going to get a rally on this one, the death cross will get retested. That's where you get rejected from, and then the chances of coming back down to where you started from are likely, and maybe even continuation down, because that is the opposite of a golden cross, and the golden cross retest gives you a V-shaped recovery and then some, which is something that we should think about, because that's exactly what the S&P is doing right now. The S&P is doing the opposite of what this is doing. It's doing a golden cross retest, 200 exponential, should be looking for a V-shaped recovery and then maybe continuation. So think about that. So you've got stocks in the form of the S&P doing the opposite of what alts are doing. So the markets usually have the power to trend as one, and that's what the S&P is doing. So does that affect crypto or not? Because you've got conflicting setups. You've got the opposing setups. Altcoins doing the opposite of S&P. What does that mean? It's up to you to think about that, But that's what we got. That's what we expected. And at this stage now, continuation is a possibility, not a probability, but a possibility. Let's have a think about VeChain doing exactly the same thing. So you've got the bounce into the death cross, rejection, all the way back down to where you started from, and then a new low formed. So no big surprise there. We spoke about that leading into this rally. We spoke about that at the top of the rally. We spoke about this on the way down from the rally. It's no big surprise. We spoke about it many times on the Patreon, week after week. Ethereum getting a fresh death cross now on exponentials, and so this leads me to believe that you're going to get a death cross retest at some point, which means that we're going to rally into that 200 exponential, where it happens today, tomorrow, next week, or the following weeks. If we were to do it today, that's 3,100 on the daily. You can move it down to a 4-hourly. You've got death crosses that were completed ages ago on the 4-hourly, and the 200 exponential on this sits at 3,030, and simple moving average is 3,134. So if you're going to get a rally, it's going to be a rally for Ethereum to above 3,000, we'll call it. So we're currently sitting 2,677. Right, so let's move back to Bitcoin and think about what this all means, really, because again, we've got a death cross over here on simples, but not on exponentials. Bitcoin is the dominant crypto still, and remains dominant, continues to be dominant. And if you were to break above this death cross, where a lot of people will be stacking shorts, and quite rightly, because I suppose risk to reward would suggest that a rejection at that level is high, but if it were to break that and then just continue on a little further above 63,000, above that Bollinger Band center, liquidity is at its highest, and shorts will be getting wrecked, and you'll be expecting a much bigger, bolder move, 68,000, maybe even above there. So look, S&P doing the opposite of alts. Okay, alts getting rejected from death crosses. S&P getting supported on golden crosses. So what is that? What are you going to do about that? How are you going to decipher that? Is that a decent trading environment, or is it too conflicting to even consider trading? It's completely your call. I'm not doing anything. I'm trying to enjoy my holiday over here. But I just wanted to put it out to you that you do have simple moving averages that are death crossing. But for me, in crypto, exponentials count for way more. As we've seen on altcoins. Now, Bitcoin and altcoin is different. Ethereum's got its death cross on exponentials, or will do later on today, probably confirmed in the morning. Take it for what it is. It is what it is. There's nothing you can do about it. It's a setup, whether you're bullish or bearish. You can take longs and shorts on these setups. It's up to you. The chances of a move into 3,100 for Ethereum is as likely as a short from that level down to new lows. Possibilities. Trading setups. That's all it is. There is no one direction forever. I'm telling you now that you can go long or you can go short, and you can make money from both if you have attention to detail and tight stop losses. But all I wanted to put out really is this talk about death crosses, and the death cross which is confirmed now for Bitcoin yesterday, and what that means. All it means is shorts can stack here, but shorts can get completely wrecked very quickly if you move above 63,000. The liquidity will be high, because if you follow moving averages, which count for a lot generally speaking, shorts should stack there appropriately. But if they get, if you move up a couple of percent, 2, 3, 4% from there, oh my God, you get yourself a god candle. You'll see a move into and above 70,000. Same thing going on for Ethereum. If you see moves up and above, we'll call it 3,300, you'll see a big move into 4,000. Because tight stop losses are the most appropriate way to trade that area. And so the right thing to do would be to take a short there with a tight stop loss. If it gets stopped out, no big deal. Lots of people won't be getting stopped out because lots of people don't use appropriate risk management, and they will be feeding the god candle because they'll be so underwater so fast. And that's where some big moves will be made. And just on a side note, over the last few days, I have talked about the Bitcoin dominance chart in a big box of resistance right now. It can get rejected at any one of these areas. I think the top area of this before we consider a major breakout on the dominance chart is above 58.5% dominance. So with that, you should think about, actually, these charts on altcoins are bearish, but are they bear traps? There's only enough evidence to say that based on the dominance chart, not looking at individual coins like ICP and VeChain and even Ethereum. They don't present in a bullish way, absolutely not. But there is another chart behind this, dominance chart, and another chart behind that being the S&P, which is showing the opposing setup to all of this. So conflicting charts. It's not clear cut. It's not a crisp trading environment for anybody. But the larger markets are the more important to me. That being Forex and stocks, being the S&P, for instance, and they are still bullish, looking for a V-shaped recovery, while altcoins are doing death crosses and looking for new lows. So it's saying, what does that mean to you? What does that mean for anybody? Does that mean we should just focus on trading stocks, or does that mean we should be short on crypto? What does it mean? I'll leave it for you to decide. Personally, it doesn't mean much to me today because I'm not going to take part in this market. I'm not going to be trading it probably unless there's a massive opportunity present itself. Until midweek next week when I get back for a little bit. Right, I'm going to leave it there. Have a little think about what I said. If it makes sense, great. If it doesn't make sense, no big deal. You can join the Patreon or you can join the Telegram. Other than that, hope you have a nice day. Take it easy.